Welcome back to another video. For this video, it's going to be a trade breakdown that I took during the New York AM session on Friday, following the pre-analysis plan that I've laid out in the previous video. First of all, I'll show you the executions, after which I will explain and elaborate on why I took the trade. This is my current new 50k Top Step account. I started this account yesterday. I took a loss yesterday because I wasn't following my rules. No trade histories to be hidden. Pure transparency. Heading back into the charts. This was the execution for Nasdaq E-mini contract. 20 handle move. Profits for today 402. One single trade, and I logged out myself. So let's hop over to reasons which led me to taking this trade setup. When we take a look at the charts on the higher time frames, it's pretty clear that today it's going to be a consolidation day. As pre-mentioned in my previous video titled Friday's Analysis. Look at how ES and YM did not trade into the range extremes except for Nasdaq. So this was the exception that I made because I wasn't going to be trading in the range. I want the extremes to be tagged before I look for something on the lower time frames, even if it is a scalp. So for Nasdaq, once we tagged this high, I went down into the 15 minutes, and right here I saw the SMT between Nasdaq and ES. The swing highs are the same, which is very clean right here. So after this swing high is formed at 10:15, I drop down into the 1 minute, looking for an execution. So 10:15, right here, we drop lower. Okay, let me just clarify. I actually took the trade right here instead of 10:15, my bad. So at this point in time when we were forming this SMT, I was waiting for a 1 minute market structure shift. So we have this shift right here at 9:57. This was the first indication, and I started to look for shorts from this point onwards. Swing high to swing low was the dealing range that we're given on the 1 minute. If I were to just key off this dealing range, expecting that this is going to be the range high, the SMT swing high, I would have to look for a PD rate that is above 50%. And the first PD rate that I would always look for is inversion fair value gaps. So for 1 minute structure, I usually start from 30 seconds, moving down into 15 seconds, and lastly 5 seconds if I have to. So dropping down into the 30 seconds, from this high to this low, above 50%, we don't see any inversions. but we do have these two up close candles. But if you take a look closely, we have this swing high right here. So there must be some form of a breaker here or a fair value gap here, which led to an attack on this swing high. So dropping down further on the 15 seconds, right here we have our very first inversion, fair value gap, which was utilized to take out this short-term high into the range extreme. However, if you take a look at the dealing range from this high to this low, I didn't change the dealing range. It is a 1 minute dealing range. The inversion fair value gap is not entirely above 50%. So if that's the case, I can only look for a bearish order block, which is present right here on the 15 seconds. The last up close candle before this swing high was formed. So because right here I was waiting for the 15 seconds to possibly form a swing high, I waited for price to show me the displacement, which after trading into a bearish PD array above 50%, so it could be two PD arrays. First PD array is this one, this two down close candle, this is a breaker, and then right here would be the order block. However, if you take a look, I only use inversion fair value gaps or order blocks. Fair value gaps are my last option. If I really don't have inversion fair value gaps and order blocks, then I will use fair value gaps. So in this case, since we have the order block present, I waited for price to trade into the order block, forming a swing high on the 1 minute. So that is very important as well. On the 1 minute, you want to see a swing high forming, and then the very next candle forms a strong down close candle. If you take a look at the previous swing high, it formed, but the next candle we closed above this potential rejection block right here. We closed above the body. For this swing high, we closed below the body, so this is very important. And then we displaced lower, forming an inefficiency on the 1 minute. Alright, so dropping down back into the 15 seconds. From this high to this low, it's a 1 minute dealing range as well. It's a new dealing range because we took out this low right here, which was the initial dealing range, right? So you can see it at your first impulse, lower, retrace, lower, so it's forming a lower low. So you're expecting the next retrace to give you the next lower low. All right. Let me just bring back the mouse, bring back the cross. Okay, so right here, from this high to this low, I will be looking for the same PD arrays above 50%, starting from the 1 minute, because it's a 1 minute dealing range. 1 minute we don't really have anything. This order block right here is not entirely above 50%. So dropping down into 30 seconds. Right here, what do we have? If you look closely enough, we have this tiny little inversion, volume imbalance right here. You see this candle tagging into the high of the volume imbalance before forming this swing high. So this is a valid inversion fair value gap. Or should I just call it inversion volume imbalance? So as volume balance are not as sensitive as fair value gaps, you tend to see prices coloring outside the lines for volume imbalances. ICT says that, not me. ICT is the one who says that. Alright, so the trade setup was to take this short, stops above this high, which is about 10.75, and then looking for just 20 points and 25 tick and 1 tick to cover commission. Alright, so this was the trade that I took. Endured a little bit of drawdown here as expected because it's a volume balance. You expect it to color outside the lines right here. Never want it close above. That is the key. So I was prepared. If price close above the volume imbalance, I would flatten the position because that would be low probability. I want price to respect a PD array, a bearish PD array. Furthermore, this PD array is in OTE range. Even more so, it should be respected if we are going to continue lower. So eventually it played out nicely. I could have looked for 0.15 as the target, but because the market condition is not the best, it's a low probability range bound market condition. It's a Friday, so everything it's lined up to fight against me or fight against the trader who's trying to engage in this market. Therefore, I didn't want to overstay my welcome, which is also why I looked for 20 points instead of the usual 0.15 level of the OTE that I always preach. So there you have it. The pre-analysis in the previous video, what the market offered, a real-time analysis right here, what I was looking for, reasons why I took this setup, and how I executed the trade idea. And that's it for this review. The reason why I broke down this trade setup is because it's the first time for a long while that I've actually followed through my trading plan, and I stayed within the framework that I have curated for myself, which I'm pretty happy about, and I'm proud of that. Therefore, I wanted to record this video for myself in the future whenever I'm on a losing streak or whenever I break my rules. I'll come back to this video and it's going to be a testimony of how following rules can give you very good results. It doesn't mean that I won't lose, but the feeling of following the rules that you have set for yourself is so much stronger once you accomplish it. So I just want to remember and record down the feelings that I went through for this trade setup from the start to the end. There was no fear of missing out, no fear of getting stopped out. Everything was pre-planned. Risk was pre-planned as well. And I feel light. I feel like it's easy. Right. I hope this helps in terms of psychology, or it helps you reframe your mindset if you're still struggling like I am. One simple tweak in discipline and behavior can result in a very significant change in the outcome. So that's it. I hope you like it, and this is really going to be the last video for this week. The weekly forecast is going to be done on Monday because right now we're still trading around all-time highs. There's really nothing much to talk about, so there's no hurry. I'll talk to you again. Have a great weekend. Signing out right now.